The Federal Reserve cut interest rates for the first time since 2008 yesterday. And in today's episode, we're going to explore what that means for all potential affected parties, borrowers, savers, credit issuers. We're going to look at what impact that's going to have on the economy. Bitcoin Cash is launching its own BCH exchange as Roger Ver silently steps down as CEO of Bitcoin.com. Binance makes adjustments to their BNB snapshot mechanism. And if you want to know why I'm so exciting, because it is happy 2-year anniversary, user-activated soft fork. Shout out to all my Bitcoiners out there. We did it. Bitcoin is better than ever, and the future looks very bright. If you don't know what I'm talking about, then stay tuned for today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you guys Thursday, August 1st, 2019, your daily source for market updates, sentiment, and news for traders. I am your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from today, and whether you're watching us from across YouTube, Twitch, DLive, Facebook, or on Roku at the Investor News channel. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat and hit those thumbs up buttons. We've got a fantastic show for you guys today. Of course, today's episode is brought to you by the Cracking Cryptocurrency Premium Trading Group. If you guys would like to trade with professionals and learn in a no-nonsense way, then please check out premium.crackingcryptocurrency.com today to find out what is in store for you. Guys, fantastic show. We've got so much to talk about. Sorry that I wasn't here yesterday, guys. I don't know what it was. It was like revenge of the sickness. It was like a bad Star Wars prequel. I felt really good coming in on Monday. Really, really good. And then yesterday I woke up and felt like I got kicked in the face by a mule. But uploaded some stuff. Thank you guys so much for the messages. I am feeling fantastic today. I sat in a hot steam bath last night for about 2 hours. I think that knocked it out. I woke up this morning very early, on point. Did my early morning money management. Worked out, feel really good, got the coffee in me. We're going to have a fantastic show for you guys today. All right, shout out to all our current Discord Nitro boosters, and we're just going to jump right in, guys. We've got a great show. Let's get over to the live scene. All right, so here we are, and we're going to start off today's show by giving away crypto as we do every single day. If you guys would like to participate, then just leave a comment at the end of the video. Shout out to our previous winner on from Thursday's video, who won on Monday, which was Ninja Fist TV. You still haven't gotten a hold of me in the Discord, my good sir, but if you do, I will tip you some crypto. All right, so we've got our video from Monday, blockchain.com to launch Coinbase Killer Exchange while China warms up to Bitcoin. 3-day golden cross. We made fun of that meme. So make sure you guys go check that video out if you have not already had an opportunity. There were some great clips in there, as we often try to do on our videos. So we're going to randomly pick a winner. Ba-ding! And Trunker, man, my good man Trunker. Shout out to you, king of the Ichimoku. He says, I completely agree on the comments about sleep and getting up early, and this is coming from someone who has been a night owl their entire life, who also used to vouch for working late. Do some research. If the vast majority of billionaires do it, there might be something to it. And I agree. We talked a lot about on Monday about about productivity, and how one of the greatest things that you can do for your productivity today is to go to bed earlier and wake up earlier, early to bed, early to rise. And of course, and I think this is going to be very true in the crypto space, we've got a lot of people up staring at the charts late into the night, which of course is not how we trade at all. We trade in a very stress-free way. We never really concerned about what's happening in the market. We only care about what's occurring when it is our time to trade. When our systems indicate a buy, it's a very stress-free, relaxing way to earn a living. Not without its complications and difficulties, of course, but that is part of what makes the grind successful. We put our time and energy into developing better strategies, into developing better systems, into improving our money management skills, into looking for new opportunities and not micromanaging a trade, because no amount of micromanaging is actually going to give you a higher statistical rate of performance on the trade. And of course, a lot of people push back on that. They said, no, they're more productive at night. They stay up late and they grind. And it's my experience that just about everybody that has come to me that is not getting the results that they want in life, who I counsel and I tell them go to bed earlier and wake up earlier. And when I text message them at 6 o'clock in the morning and they're up and they've already had a workout, they've already drank water, they already feel good, they're hopping in the shower, they come out, they're ready to go at 7 o'clock in the morning feeling refreshed. They work from 7 to 2. They get so much done. They feel so productive. And then when the evening comes, they spend time with their family or time in leisure activities doing what they want to do. And then they go to bed and they wake up the next morning and repeat it all over again. It's my personal experience that staying up late and grinding late into the night really is not that productive. It's not that productive. It's also, you also suffer from diminishing returns because the more tired you get and the more you do that, the less your performance is. You don't feel this. This is very hard to self-diagnose. But it's easy for somebody who is evaluating your work, for example. This is why the buddy system is so important, especially when you're doing something, something creative. You need to have somebody on, somebody that you trust who you allow to check you. All right. You need to have somebody that you trust that you allow. And this is difficult for guys, but it's absolutely a necessity. You got to have somebody that is texting you at 6 o'clock in the morning, making sure you're up, keeping on you, keep pushing you. When it's that day and you just want to pull the covers over your head, you need that guy to be like, hey, nah, man, we need to get up. Let's work hard. Let's grind. Let's hustle. Let's get the work in today. And we can do all that stuff later. You need to have that person in your life. And this works best if you're the other person for that person as well. Sometimes the other way that it can work really well is just like kind of the chain down, right? Where you find somebody to take under your wing as a student and you become the mentor and you look up to the mentor who is helping to motivate you, where they're looking up to another mentor. So it's never an appeal to authority. It's never a call to on high where once you go up the chain high enough, somebody's just all perfect and immaculate and amazing. No, it's not, because even myself as a human being who is a highly disciplined and successful person, I have people that I need to call me on a regular basis and keep me on track and make sure that I'm performing and doing what I am supposed to be doing. All right, so Trunker, congratulations, man. You know me. We talk all the time. Get a hold of me in the Discord, man, and I will give you some crypto. Okay. So big shout out to, I don't have all the, I apologize, guys. I wasn't feeling very well yesterday. I'll have the graphics ready for this tomorrow. But a big shout out to our August crypto comment giveaway sponsor, which is going to be X42 Protocol, guys. You can go check them out at x42.tech. I've had Gabriel on the show several times. It's a fantastic project. I'll have all the graphics and all the nice, funny, good looking stuff coming up here pretty soon, done for you guys by tomorrow. But big shout out to them. Thank you so much. And big shout out to our previous month's our previous crypto comment giveaway sponsor, which was MMO Coin. So, all right, guys, let's break right into the charts today. A lot of stuff to talk about. A lot of people flipping bullish. If you guys think that my inbox is crowded on a regular basis, it's pretty crowded this morning, and it was pretty crowded last night. So let's go take a look at the daily chart, and let's go look at what we've got going on, okay? And I've got a phone call coming in. Can't take that right now, sorry. That was my aunt in Ohio. I can't take the call, sorry. All right, so we need to make a few adjustments because this was set up from FX trading on the previous evening. Okay, so let's take a gander here. Let's look at a few things. All right, so did I flip long? No, I did not. Actually, I did not flip long. Now, 3 nights ago, I did exit my full risk short. All right, I ended up taking profit on that trade. Locked in, again, a pretty good number because it was a full risk trade, but I exited my full risk short. I'm still in my 1x short, guys. I am still hedged across the market on pretty much all USD pairs. Everything that is on ByBit, all my accounts on ByBit are in a 1x short position. And again, I need to find a better word because I've always said 1x short to mean an equity hedge, but I've used that term. And then the leverage slider seems to confuse a lot of people. That's why I made that video about how leverage and short selling and margin work in cryptocurrency. So make sure you guys go watch that video. I'm going to have to just make a better video, a more detailed video, and really go through the math with people because they don't seem to understand, and again, for those of you who do, but I just answer these questions so often. And again, it's not in any way that I do not like helping people out or that I get exasperated helping people out. It's not really that, although the exasperation can be a point, but it'll make sense here in just a second. It's that, my entire life is dedicated to helping people out with trading and understanding concepts so that they can receive the success that they want. And I go through a lot of topics, and I have no problem walking people through that. But when I've explained something many times, and it's been the exact same information every single time, and I keep getting the same questions, I just have to, it's on me. I have to make a video that really walks through the math in a more comprehensive way. I just need to do better at explaining it. I really do need to do better at explaining it because I feel that a lot of you have grasped it, but I can't understand how it can be a complicated concept and difficult to understand, especially for a new trader, especially for a newer trader. And for a newer trader coming in, some of the best out, a lot of people say, hey man, just go to Coinbase and trade on Coinbase, or go to Binance, trade on Coinbase. I don't actually recommend that. I generally don't. I prefer ByBit. Even if you're just going to take Bitcoin trades, trade on ByBit with 1x leverage, with no leverage. Don't use any margin, and just use your risk management on there. It's a better platform. The liquidity is better. The order features are better. Coinbase is not a good platform to trade on. Binance is not really a good platform to trade on unless you have 3 commas. And I don't really recommend that people start off on that, because again, the problem for a newer trader coming into Binance is too many options, too many things going on. You want a newer trader to keep it simple. Just trade Bitcoin to the dollar. And here's this platform, and we're going to be building on your knowledge moving into the future. So I don't actually recommend that people come in and just trade on Kraken or Coinbase or something like that, because they're not going to stay on Coinbase or Kraken. So, and they can do the exact same thing with a better format over on ByBit. So that's my general recommendation as far as that goes. But and then again, they also have access to just going short if they want to. And shorting isn't dangerous. People just need to understand leverage. Directional trading is not a problem. When price goes down, you make money if you're short. When price goes up, you make money if you're long. So anyways, guys, sorry for that little rant, but I just need, the onus is on me to do better and explain the situation better, and explain how leverage and margin and short selling work better to everybody. So, having said that, did I flip long? No, I did not. Also did not exit my 1x short. Still on my 1x short. So let's break down price action and look at where we're at from my perspective. And then I'll kind of let me know what you guys are thinking in the comment section. I'd be really happy to take a look at what you're thinking in the market. Obviously, a lot of people are pretty excited about price action, and the reason why people are very excited about price action is because we had a very big candle. That's really it. There's really nothing about this price action that or this level or this moment in the market that is supremely impactful, I think. But again, you guys know that that's not really the way that I trade. So let's just look at the chart, and let's look at what is pretty clear here. We're going to reduce. So we're going to be having Fisher transform on. This is a indicator. So Fisher transform is obviously not an algorithm that I've developed. This is my interpretation of the Fisher transform as originally conceived and created by John Ehlers, who I'm a big fan of. I think that his ideas about the market are fantastic. If you guys have not studied John Ehlers, I highly recommend that you guys go check out his work. That's been very influential in how I trade. I've used many of his indicators. I think many of his indicators are far superior to almost all of the built-in indicators. And that's why, and one of the inspirations for me creating my own. And so this is my take on the Fisher transform algorithm. Now, the Fisher transform indicator works really well as an initiator. So an indicator to get you into a trade. And there are multiple ways, because the Fisher transform, as you see here, is a hybrid indicator. So let's go over this just real quick. So it's a hybrid indicator. So that it is going to be most commonly used for reversals, because most traders want to trade reversals, and that is not the way to trade, in my opinion. The way to trade is by confirmation of trends. So a lot of traders are going to try to trade reversals with this, because the Fisher transform does identify overbought and oversold moments in the market. You have to remember that when it pertains to cryptocurrency, there is no intrinsic value. So, and again, I don't mean that to say no value. Intrinsic value is a definition, meaning that there is capital brought in. As it pertains to investing. So with cryptocurrencies, there is no company that we are beholden to. There is no income reports to look at. All we have when you're trading one currency against another, it's just like the Forex markets. There is no such thing as intrinsic value. So things can remain overbought or oversold indefinitely, because there is no median price for them to come back to. Outside of the realm of a statistically derived median price for price to come back to. There is no value derived price for price to come back to. Now, there are lots of calculations based on user adoption, based on market capitalization, based on competition with gold's market cap, for example. So these are all things that we can look at, but from an investment standpoint, it just doesn't exist. So that's why, in my opinion, overbought and oversold are not really fantastic ways to trade. Yusef Clack, thank you so much for joining the community over there on YouTube, my good friend. Going over the Fisher transform. So a lot of people are going to be using it to identify overbought and oversold areas and then looking to enter into reversals. There are going to be multiple ways that you can do this. As you can see here, the upper solid purple line is going to be identifying your overbought zone, and your solid purple line to the bottom is going to be identifying your oversold level. So a couple different ways to do this. Obviously, one is going to be and then you have your zero line, which is bisecting your positive, your bullish control zone, and your bearish control zone. So the way that I would trade this as an initiator, as an entry indicator, is when price crosses and closes above the zero line, you would go long. And when price crosses and closes below the zero line, you would go short. Okay. The other ways to trade this are going to be when the blue line, which is going to be the Fisher, crosses under the signal line, which is the yellow line, then you would go short. If price is typically above the bullet, or if price is below the zero line, typically, because then you're trading into bearish control zone. And if the blue line crosses above the yellow line, then you would look to go long, especially if you are in bullish control zone. Ways to trade, those are going to be trend following trades, going long when price crosses and closes above the zero line, and when the blue line crosses above the yellow line, when price is above the zero line. Trend following trades to the downside to go short would be price crossing and closing below the zero line, and the blue line crossing below the yellow line. The blue line crossing and closing below the yellow line when the Fisher is below the zero line. That is going to be, those are trend following trades. Reversal trades, trading against the trend, is going to be when price goes below the oversold level and then comes back up, you would go long. When price goes above the overbought level and comes back down, you would go short. And similarly, when the blue line crosses underneath the yellow line above the bullish control zone or above the zero line, then you would go short. And when the blue line crosses above the yellow line below the zero line, you would go long. Those are reversal trades. The Fisher transform also identifies divergence. I think it does a much better job at divergence than something like the RSI. So a lot of possibilities here. And actually, time transformation, which is my further implementation on this using my own custom ideas, does identify and delve deep into all those topics. And I know a lot of guys in the group are using time transformation because of all those features. It works really well on lower time frames as a scalping mechanism, really well. And you can use the MTF feature to be analyzing different time frames and using those as initiation features. But for the purposes of today's video and for the purposes of this month in August, we're going to be using Fisher Transform as an exit indicator, meaning if you are in a trade, if you are in a long trade and the Fisher crosses underneath the signal line, you are going to exit that trade for any reason, whether you're in profit or not. If you are in a short and the Fisher crosses above the trigger line, then you are going to exit your short for any reason. For any means necessary. That's from a movie. For any reason. It's from The Love Guru. It's from The Love Guru. Dude says, pick a fight with anybody or something for any reason. Okay. Good to see you guys. Am I really double fisting coffee for the show? No, this is just for, I've never drank coffee. I've never drank anything out of that cup. ByBit was kind enough to send that to me. I need to close down live split because I haven't caught a single split. I'm sorry, Scott. Okay, so we're going to be using the Fisher Transform as our exit indicator this month. We've gone over and talked about VPCI just a little bit, but those aren't super important for the purposes of today's show. So let's just look at price. Price had a nice bullish candle on yesterday's close. Again, we had about a 5.18% candle from open to close yesterday, coming off the lows here and putting in a nice bullish candle, which found resistance at our tertiary baseline. Crossed and closed above our primary baseline and found resistance at our tertiary baseline. So We are currently rejecting from our tertiary baseline. We had a wick all the way back down to our secondary baseline. And I want to point out exactly what this did to our looming baseline cross under, which is what I talked about. And actually, if you guys go and watch Monday's video, I talked about this. I talked about this happening. I talked about when we get those baseline cross unders, or when we're close to getting those baseline cross unders or crossovers, often we see a lot of volatility happen before the shakeout, or a shakeout before the actual move. So in this situation, what did we see? We saw price shoot up, liquidated a lot of people that tried to short the bottom because they should have already been in a short. They should not have been trying to initiate a short at the bottom. They should be looking to take the breakdown short, the breakout short, or they should be looking to enter into a short at a higher price or upon initiation of a confirmed signal. We have to understand that a continuation short, as defined by PTP, is by definition a breakout or breakdown trade, because we've already been in an established trend. We're already in an established trend, and we're waiting for a breakout of a price range typically before we initiate another position, because we're looking to catch another trend inside of a larger dominant trend, right? So we're looking to catch a micro or meso trend inside of a macro trend. So price coming back up to our tertiary baseline, which is the 21 exponential moving average, and rejecting. We currently have price in kind of this jaws of the crocodile area in between the primary and the tertiary baseline. So this is not really indicative of taking any movements to the upside now. And why is that? Because we're going to look at our indicators. So we do have Minx signaling along on the close of today's candle. Minx did not signal along yesterday. So again, or the day before, which is why we would not have taken a signal or gotten the trade off of yesterday. I know some guys on LTFs got it. That's absolutely fine. But we're looking for daily trends. We're looking to trade in the direction of the daily trend to base any of our lower time frame strategies or algorithms upon. Okay, a lot of people are going to realize this. A lot of people are going to be running trading bots on top of their manual trading, and that's absolutely fine. It's absolutely fine. But you need to know what inputs to put into your trading bot. So not necessarily your inputs, because that's on how good of an algorithm you can develop. But the biggest problem for bots, from bot users, is that they don't know when to turn their bot off, or they don't know when to adjust when it makes its moves. So bots perform typically really well in bull markets, and then when bear markets come around, their bot just does nothing but bleed out money, and they don't understand that. And that's because you need to switch the logic. You need to switch the directional bias of your bot. And a lot of people when they get a bot, they spend some time working on it, or they copy pasta somebody's idea, and then they turn it on and they don't really know how to troubleshoot it, and they don't really want to take the time to troubleshoot it. And that's absolutely necessary if you're going to be having some automated system managing your money for you, because don't use the wrong words. When you're running a bot, you are having a computer program manage your money for you. That is what that's what you're doing, because your money is on the line and you are trusting a robot to do that for you. Now, there's nothing wrong with that if you know what you're doing. In fact, some of the more successful traders that I know are algorithmic traders. And as a lot of people know, that's something that we're actively working on. But when it comes to directional bias for your bot, you have to know when to tell it to not take longs when the trend is bearish. So fantastic movement for the reversal traders out there. As I always say, reversal traders do have to get a winning trade every once in a while, or they will stop playing the game. The problem with trading reversals is that you are at the whim of any market mover, whereas when you are trading with the trend, you already have odds on your side, because if price has been moving up for a while, then an object in motion tends to stay in motion. All the statistical laws apply to you. Your statistical edge is improved greatly when you trade in the direction of the dominant trend. And typically when you stay out of chop. And that's what we've seen. We've seen a lot of chop and pop. And I don't really see, to me, this is nothing different from that. So can we get a breakout trade to the upside? Absolutely we can. Are we going to get an establishment of a bullish trend? It is absolutely possible that we could. But I see nothing from this price action that indicates that to me now. So I am not eager to hop into a long. I'm more than happy to hop into a long should my system tell me to get into a long. But there's nothing here that's indicating for me to take a long. In fact, Wada explosion is telling me to stay out of a trade by printing a column below the explosion level. We also have a non-rising explosion level. So if somebody was using Wada explosion as their initiator, then they would have no trade to take today. There would be no initiation of a trade today. So Let's look at, again, let's just start with Minx. Minx is signaling a long trade. Minx is a very sensitive indicator, and that's why we are able to capture the preponderance of trades that we're able to capture. But we need to look at our confirmation indicator. We need to look at our confirmer, and we need for that to give us the go-ahead. And unfortunately, in this situation, or it's not unfortunately, there is no signal being generated from Wadatar Explosion to be taking a trade. And of course, that is our confirmation indicator. Now, a couple of the guys, I wouldn't say a couple, quite a few guys in the group flipped this on its head. And because Minx is more sensitive, they use Minx as the confirmation indicator, and they use Wadatar Explosion as their primary indicator. And if you guys would like to use Wadatar Explosion, you guys can head over to tv.krakencryptocurrency.com. It is a public indicator available under the MIT license. You're free to use it, so go check that out. The rules are included in there. And it does a lot of neat stuff. I'm actually working on a newer version because I've been running more advanced models of Wadatar Explosion in isolation. I've been running that across all altcoin pairs, and I found that there are specific changes that you can make to make it work better. It is a fantastic initiator all in and of its own. It's one of the best that I've ever come across. Coffee's getting just a little cold today. Let's see here. Okay, so we've talked about Minx, we've talked about Wadatar Explosion. Let's actually just make it simpler, and let's look at our baselines. And let's just look at our baselines here. So what our baselines are doing is we can see that the divergence between the secondary and the primary baseline has narrowed extremely tightly. And this says a lot about volatility. Obviously, we've seen volatility die down. Generally, the farther apart, there's a couple different ways to think about this. You can kind of look at it as a contraction and expansion mechanism. So the farther apart the baselines are from each other, it means the farther or the more violent that short-term price is moving in the direction of the dominant trend, as opposed to historical price or longer term price, which is what our secondary baseline is going to represent. There are so many factors that go into interpreting a baseline. The first thing we can interpret is the tilt, the curve of the baseline itself. If your secondary baseline is tilting upwards and moving upwards, then what that means, what that is directly telling you is that whatever term length, and for us, our secondary baseline is midterm price length. Midterm price history is bullish. As we can see here, short-term price and in-between price, so the area that is between midterm price and short-term price, those are both bearish. So we have a kind of a meeting of the forks where midterm price is bullish. It's been bullish up until then. We've been in a strong bullish trend, but the short-term price has corrected us significantly and is currently bearish. Now, what do we see? All of our moving averages are moving flat. A couple things can happen when this does occur. You guys can go back and test this throughout history. When this does occur, of course, we are on the ByBit chart here, so you guys can go look at the Bitstamp chart. You guys can go look at the Coinbase chart or the BitFinex chart to go get some good historicity from this. But typically, when your moving averages go flat, you're going to see consolidation, or a couple different ways it can happen. With Bitcoin, because Bitcoin tends to move fast, typically you've already been in consolidation for a while. You're going to have a little bit more consolidation, and then you're going to get the breakout. Or by the time your moving averages go flat, you're looking to get the breakout or breakdown already. Now, looking at this, if we do get that baseline cross under, I feel that Bitcoin's price will correct more significantly. Of course, I've talked about the lower areas where I would be looking at the 8,500 area, maybe a little bit lower. But again, we don't call prices on this channel. That is for fools, in my opinion. We just trade in the direction of the dominant trend, and we enter and exit when our indicators tell us. And it's a very easy, profitable, stress-free way to trade. Now, the other thing that can happen is, and this I noticed quite a bit, so this movement doesn't really surprise me because we get that we have the looming baseline cross under. So we have an event looming on the horizon, which is bearish. That is going to be the baseline cross under. On the daily time frame, we often don't see a whole lot of fake outs of those movements. If you guys just go back and test the EMA cross strategy, you'll see that it has a extremely high percent profitability and win-loss ratio. Not a lot of trades on the daily time frame, but they typically almost always work. So you don't see a whole, you can, again, it's not to say that you don't have any losing trades, but if you just go long when the baselines cross over, then you typically make money, almost always. And when you go short, when the baseline's cross under, you typically almost always make money as well, with very few losers in the mix. Again, this is something that you guys can just go test for yourself. Go throw a 13 exponential moving average on your chart and go through a 55 period exponential moving average on your chart and test when they cross over and when they cross under and see how many times it's profitable versus not profitable. So, EMA's moving flat, consolidation, waiting for a breakout trade. Otherwise, you're just going to be looking on the lower time frames, guys. You're going to be looking on the lower time frames, and I would be biased to taking short trades. So whether you're trading on the hourly or the 5-minute or the 4-hour, you're on the lookout for short trades. You really need your daily to flip bullish before you start looking down at your LTFs and looking for bullish trades, in my opinion, because that is a trend change and you need to be in an established trend to be looking for those signals. And the nice thing about the daily trades is that you can take those daily trades with a larger amount of capital, and then you can trade on lower time frames with smaller amounts of capital to really rack up and extract more profit from the trending movement. So where do I see price going in the near term or potentially today? Let's unhide this. Let's show this. Okay, well, of course, we don't call prices on here, but again, there's really two scenarios on the table, which is we continue to see a little bit more of this fake out of the short. We do see price end up rallying more, crossing and closing above our tertiary baseline. And again, if that can happen with enough volume, we can start to see Wadatar explosion flip and shift, and potentially if we have a good enough candle, then we can be looking to go for the long side. If that does end up happening, and we do get a nice bullish candle up to the vicinity of 10,500 or above, then we'd be looking for a pullback to enter into our long trades, depending on where price is in relationship to the qualifying line at that point in time. The other thing, and again, my more likely scenario, is that we see a little bit of consolidation for a few days between the primary and the tertiary baseline, or between the secondary and the tertiary baseline, before price again crosses and closes below the secondary baseline and continues to the downside, as I think it most likely will. But again, happy to be proven wrong, but price needs to prove me wrong, not some analyst's predictions who's looking at fibs or something like that. Can I have a look at the 1-second chart, please, and explain the point of it? Well, it's just it's not really the lowest that you can go to, but it's the lowest price calculation by tick price, chart that you can get to. There are algorithms that run off the 1-second chart. Typically, humans aren't going to do very well trading on the 1-second chart because your reaction speed's just not going to be fast enough to catch trending movements. But again, there's lots of, the 10-second chart's not actually bad for looking at developing trend changes. You can actually see those pretty well. But again, the problem with that is subjectivity. So typically you're going to have a significant amount of subjectivity when you're looking at a time frame that low, because you are, and especially if you're trying to interpret price. There's nothing wrong with using, a really low time frame for algorithmic trading, especially if you are aware of, as I just touched on, when to kind of flip the directional bias of your longs or shorts. But if you are a manual trader, you typically want to stay away from timeframes like that. But the point of it is just to provide more data at a faster interval. Elax Gixmo says, why use a VNP? It's VPN. And do I use one myself? Yes, I do use a VPN. I use a VPN pretty much all the time, except for when I'm streaming, because it does interfere with my streaming capacity. Why should you use a VPN? Because it is kind of your last bastion of digital privacy. Most people do not care about their digital privacy or security whatsoever. So it should be nobody's business what you're doing on the internet besides yourself. Shouldn't be any company's business, shouldn't be any website's business, shouldn't be the government's business. And using a VPN is a practical and fairly easy, low-cost method to actually protect yourself and mask your IP address, i.e. masking your geolocation, i.e. masking your internet activity to a certain degree. It's not a bulletproof vest. It's not perfect. It does have, it has its own issues. But it's a pretty convenient, easy, apply to all tool that you can use to actually protect yourself. Because again, having your IP address exposes you to a lot of different types of attacks. And so masking your IP address is a very, very, very good idea, especially if you're doing personal, financial, sensitive information online. Hey, no problem, Kyle. Good to see you, brother. Okay, so let's go look at Ethereum. And then we've got a whole lot of news to cover today. And I want to do my Forex analysis because I've had some limit orders trigger and I want to move my stop losses to break even. So Ethereum, again, a little bit of a laggard. So Ethereum actually not moving as far as Bitcoin. Bitcoin putting in some nice bullish activity. Again, as I said, about a 5% candle. And Ethereum putting in about 4.15, so lagging behind about 1%. Not making it up nearly as high relatively as Bitcoin because we are an established bearish trend on Ethereum. We've already had the baseline cross under on Ethereum, so we are still reeling from that and trading under that philosophy. So again, a lot of people got excited to go long last night. Price came back up to test the primary baseline and rejected immediately from it. So again, Wadatar Explosion is telling you to take no trade. Minx is bearish below the zero line, but it is getting closer and closer and closer to the zero line. And Wadatar Explosion is flipping green, so is flipping bullish. So if we do get a nice breakout above the primary baseline, there will be a long on the table for Ethereum. We can look at VPCI. We can see that volume price confirmation index is trending and rising up above as well. The non-zero lag is above the zero line as well. So it is telling us that based on recent volume, the volume is there. So I would be looking to take an Ethereum long should price go ahead and cross and close above the primary baseline and give us the volume and volatility that we need to initiate a bullish trade. There we go. But other than that, there's nothing to do right now. The reversal baseline bounce was the trade to take. If one would have taken that trade, then one would have been up. If one would have taken the reversal baseline bounce trade, then one would be up about 2.30%. So what do I see kind of in the interim? Obviously be looking for those continued short positions and only be taking the trade on the breakout above the primary EMA, above the primary baseline is how I'm looking at the chart and how I'm viewing it at this moment. Let's look at ETH Bitcoin. ETH Bitcoin continues to look terrible, continues to look quite terrible. We did get a cross back below the primary baseline here. Wadatar Explosion did not allow us to take that trade in this particular situation. But again, did set us up for a nice trade. Minx signaling the short here. I do have all signal filtering turned off on Minx at this current point in time. Or signal displays is what I mean to say. You can turn it back on in the settings. Long and short. I just turned it off because I find that those are distracting to me personally because I wrote the dang thing. So yeah, anyways, ETH Bitcoin not really looking very good on ETH Bitcoin. I will say, obviously price is significantly low. If we go look at a little bit of a longer chart, so if we go look at ETH Bitcoin on something like BitMEX or the Bittrex chart, for example, right? Yeah, we can see that we are approaching near 2017 was the last time we even touched a price like this. And we are touching, we are approaching 2016 levels of resistance. So there's a lot of kind of hubbub made about that, about how Ethereum Bitcoin is extremely undersold, extremely overvalued. Again, I don't trade reversals. I wait for the market to prove its bullishness before I look to take long trades. And, again, December 2018, the run up in December 2018 was a pretty good time to take Ethereum Bitcoin to the upside. There were been a few more micro trends there. But overall, this has been one of the greatest coins to short on God's green earth. This has just been one of the greatest no risk coins to short pretty much since 2017. June of 2017, when it had its massive bullish run up, beginning in December 2016 and all the way up. So anyways, that's about it, guys. What is the primary baseline? So a primary baseline is going to be a line on the chart that you have to tell you whether you are bullish or bearish. And if you are above your baseline, then you only look to go long. And if you are below your baseline, you only look to go short. And that can be whatever you want it to be. I teach people how to find their own baseline in PTP. Are there any options for people in the United States to use leverage trading? The ones I found are supposedly not available in the United States. Kraken Kraken is available to you. And currently Binance, but that will be, and well, actually, no, not Binance, because you have to have a verified account. So Kraken. That's pretty much it. They offer up to 5x leverage, which is pretty much all you need. Otherwise, you'd have to utilize a VPN if you wanted to access a leveraged exchange. Let's see here. Thank you so much, Philip. I highly appreciate that, my good friend. Anyways, so again, continue to be bearish on Bitcoin until proven wrong by the market, and I haven't been for almost 2 years now. So let's see here. LTC, BTC. Litecoin looking pretty good. We did cross and close above the primary and the tertiary baseline yesterday. Signaled a primary signal from Wadatar explosion. And of course, excuse me. Minx was already quite bullish. Minx did give us the long signal over here on the 24th of July. A little bit of consolidation, but now finally closing above the tertiary baseline with a very beautiful signal from Wadatar explosion. So again, Litecoin Bitcoin actually looks quite good to me. I'm quite bullish on Litecoin Bitcoin at this point in time and in an active position on Litecoin Bitcoin. I'll be looking for this overhead resistance coming in around 0.010684 currently. And again, if we look at QATR, need to fix this in the code. This just started popping up. All right, there we go. If we do go ahead and look at our QATR levels, of course, we'd be looking at something like not 103. We'd be looking at not 109. We'd be looking at not 114. Phil asks, isn't overbought and oversold really consequence in relation to liquidity versus price? So to an oscillator, the way that overbought and oversold are calculated is going to vary from oscillator to oscillator, but all that means is that there's an upper and a lower boundary to an oscillator typically, or some arbitrary level that determines what overbought or oversold is. And typically the idea is that if price goes so high, it is above this arbitrary level on this oscillator and therefore is overbought, and a reversal is likely. And I do think that that is a prime example of something like a self-fulfilling prophecy in trading, because the only reason why that would matter is if a whole lot of other people were looking at that and thinking the exact same thing. You can say that it tends to coincide pretty well with, investors who have made quite a bit of money, feeling antsy and wanting to take profits in an uncertain marketplace. But in reality, there's a verbiage. You have to understand this. There's words that have definitions in trading, and there's words that have different definitions when you apply them to investment, or words mean different things in different markets, right? So overbought and oversold in the stock market, when you're dealing in the realm of intrinsic value, whether you're talking about commodities or whether you're talking about stock prices, is in relation to the current price of this asset or commodity or stock is undervalued or overvalued. That's really what overbought or oversold means. It means that there is a consensus of what the fair market price is for this asset or stock or commodity, and sellers have gotten too aggressive and pushed the price below its fair market value. So the dynamics of overbought and oversold happen when investors see that. They see something that is oversold. They see the value in the intrinsic value in what it is that has been oversold, right? They basically see something that is more valuable ravaged by sellers, and they're going to come in and swoop it up, and that buying is going to push price back to fair market value. Those speculators will then sell at that price potentially and earn a reward for their speculative efforts. And that's the kind of the invisible hand of the market. That's the dynamics of buyers and sellers keeping price, asset price in fair equilibrium. And very similar, when something has been overbought too much, it's been priced too high against its consensus fair market value. And so sellers are going to come in and sell the market down and be rewarded for their efforts. Tony Stark, good to see you, man. Would you just look at VeChain? Just look at it. Bullseye says, Justin, thank you for teaching us specific indicator strategies like you did earlier with Fisher T in such detail manner. Thank you very much, man. Highly appreciate that. LTC USD, of course. LTC USD. We'll go look at this on Coinbase. Again, Litecoin to the dollar looks good. It doesn't look as good as LTC BTC. If we look yesterday, we did get the long signal in LTC USD. So as I signaled to a lot of the guys, the trade on, Litecoin to the dollar is valid. The trade on Litecoin to Bitcoin is valid. Again, it doesn't mean that the trade is guaranteed, but it just means that all the bullish, that all the signal generation is done. We got a verified long signal on LTC BTC. I took the trade on LTC U19 contract, and LTC USD and USDT look very good as well. So you can take that trade wherever you like. But overall, we look quite good. LTC USD does look quite good. Let's look at again, we can see that volume is confirming. The volume price confirmation index is confirming as well. We've got our Z Lima moving up as well, and our regular non-Z Lima moving up as well, confirming the bullish movement in price. In fact, as soon as this, we don't have enough data, so we can't look at this segment, but we can look here and see where we last closed. We closed above the 0 line, so that's actually quite good. Light Yagami, good to see you. How is 4chan doing for you today, my good friend? I have not looked at ZERP yet. I will be happy to put that on the request list for you, my good friend. Let's see here. Litecoin USD, and let's go look at BNB. BNB BTC, again, putting in a little bit of bullish reversal activity behavior as well, popping right back up to the primary baseline. I do want to note out that I did have, from the olden days, I did draw out these levels of support and resistance on BNB BTC. Let's get rid of Quadrigo ATR here for just a moment. And I don't like it. Okay. Okay. So, again, kind of bouncing off of this previous level of resistance, i.e. support, we have a pivotal swing high for the year of 2018. Price broke above that, and we found some decent support on that level ever since. So again, kind of on that pivot point between 2018's price high and 2019's price low. All right, so basically meaning a no trade zone for BNB BTC. Of course, BNB holders will hurrah, hurrah, hurrah. Of course, again, I do hold some BNB. I think it's a coin that you just have to hold, obviously, for trading fees. And I think that it is one of the better coins out there. 4chan is a pit of despair per usual. Yes. Yes. I could imagine. So anyways, BNB. No long signal on BNB yet. Wadatar explosion is obviously looking bullish. We are printing a column above the explosion level after about 3 days of being told to be out of trades. But Minx is bearish, so we're getting some conflicting signals. So again, based on where we're sitting and based on what the indicators are saying, truly a no trade zone for BNB in my estimation. Again, Should we get it's probably going to take a day or two. It depends on where Minx ends up closing here in a few days. For price to kind of rally back up and close above the primary baseline, we'd be looking for a potential breakout trade. But again, we didn't really see those alts outperform Bitcoin significantly. We haven't really seen the gassing up for this alt season yet. So, I mean, we'll see. It's still in the cards. BNB USDT. Now, BNB USDT, on the other hand, does look better. Still, the components are not that yet there for a long trade. Again, the worst thing that could possibly happen is we end up getting this lower high, which at this point is more than not likely to happen with BNB. But as we can see, we are potentially going to be closing above the primary baseline, but with no signal from Minx and no signal from Wadatar Explosion. This is not something we'd be looking to go long on yet. I would actually expect to see rejection from the tertiary or secondary baseline on this, more than likely the secondary baseline, the tertiary baseline, unless the actual trend is going to change, in which case we would be looking to take a long on BNB USDT. So nothing yet to do with BNB USDT. So with that said, guys, we're going to head off to our first and our only commercial break. And when we come back, we're going to be breaking down the Forex markets, and we're also going to be looking at the news of the day. So you don't want to miss this. We're going to be talking about the Fed's rate cuts, what this means for Bitcoin logistically, and what this means for you as an investor and as a trader. We're going to talk about the new BCH exchange launching. We got a lot of other stuff to talk about. What else are we going to talk about? And we're going to talk about the history of SegWit, guys. So today is UASF 2. It's 2 years since UASF, since Bitcoin triumphed over Bitcoin Unlimited and triumphed over S2X. So a lot of you guys, I don't know if how many of the viewers in this space have been around in the Bitcoin community for or were active at that point in time, or really paying attention to it at that time. But it's always important to pay attention to the fundamentals. And, as a proud Bitcoiner, it's just really, really makes me so happy, because it was such a feeling of victory back then when, when BIP 141 was implemented. So we're going to break that down. We're going to kind of do a remembrance, how SegWit got implemented, what it meant, what the feeling was back then. And it's if you guys like Game of Thrones, it's really one of the best power play dramas of Bitcoin's history. Really. I mean, it's a fascinating story, and we're going to break all that down, guys. Before we go to break, as a professional trader, I am commonly asked what exchanges I trade on or what metrics I evaluate when I'm looking at what exchange I want to trade on. And I always say the same thing. The metrics that I look at when evaluating an exchange are going to be security, ease of use, and customer service. I have to trust that my funds are secure on the exchange. I have to be able to utilize the features that I want, that I'm comfortable with, that I need to trade, but that are also going to be accessible to me in a comprehensible, easy to utilize manner. I don't want a clunky UI. And of course, the most important thing to me is customer service. I need to be able to reach out and speak to somebody if something's not right on the platform, because often, especially when you're trading on a new platform, you're going to have unforeseen issues. Now, the greatest customer service that I've seen out of any cryptocurrency exchange is going to be coming from ByBit. I've moved the majority of my Bitcoin trading over to ByBit. I've been trading over there for quite some time now. I really enjoy their platform. I highly recommend it to anybody. If you guys would like to try ByBit for yourself, you guys can go to bybit.crackingcryptocurrency.com. If you use that link, they will give you up to $60 to test their platform out to use as margin. So you can make the decision for yourself why I like ByBit so much and why so many people are switching from BitMEX to ByBit. Again, that's bybit.crackingcryptocurrency.com. Link is also in the description down below. All right, guys, with that being said, we are going to head to break. Hopefully you guys are doing absolutely fantastic, and don't go anywhere. We'll see you in just one moment. Hey, what's going on, guys? It's times like these I tend to get Post Malone stuck in my head. All right, moving right along. In our first hour, we went over our Bitcoin analysis, our Ethereum analysis, our Litecoin analysis, and our BNB analysis. So if you guys are tuning in for the second hour, make sure to go back and check those out. There will be timestamps as well as all the show notes at breakingbitcoin.money. And to those of you who stuck with us from the first hour to the second hour, you guys are the champions, and we are going to conquer the world. So let's get right into our Forex trading of the day. I have been and again, I'm not to brag because I don't like humble brags, but I'm happy. I have been slaughtering it on Forex. As I said, I had a first fantastic week of Forex, a good second week. Third week had losing trades, a drawdown week. And then kind of earlier, moving into the last week of July, I was also kind of breaking even, right? And I was like, all right, cool. I'm only up like such percent. But ended up closing out July very well. And the trades that have carried with me from July into August are all in the green. I've had such a good run the last 7 days in Forex. Just the market has been absolutely so giving in Forex. Now, my algorithm is a little different in Forex trading than it is for cryptocurrency. And when the time comes, I'm going to show all the guys in the group that, because we're going to do we're going to finish up PTP, walk through the entire course, and then we'll talk about how to apply that to Forex. And I will share my system with the guys in the group as well. Back to the upside. Well, let's get into Forex for today. We're going to start off with the Aussie yen. We are on the daily time frame here. Aussie yen here on the daily. All right, now continually a little bit more upset that I missed the Aussie yen trade. Just a fantastic big screw you candle coming in on the face of this. Now, this was a day that I was not feeling extremely well. This was right toward the end of last week. And again, this was just a trade that I missed. And you can see right here on this candle is when it was actually signaled for me to go short on this particular one, and just missed this one. That would have been so many pips. So I missed that one, but okay, that's totally fine. Aussie Kiwi, nothing to do, right? Actually, let's bring back Minx. Aussie Kiwi is potentially signaling a short on this trade, but the only thing about the Aussie Kiwi, as you can see, I was short, long on the Aussie Kiwi, took profit on this candle to the upside. Did not take the reversal trade to the downside, though. But again, we are below the primary baseline, so still bearish on this. Let's look at, let's bring up QATR. QATR. Now, we might be able to go ahead and hop on this Aussie Kiwi to the short side. But again, I'm going to have to check the news calendar. I don't know if anything fundamental happened with Aussie Kiwi. I don't trade into high events. There was nothing for the Aussie yesterday, and this is the second Aussie base pair that I've seen take an absolute dive today. So I'm assuming that's going to be a trend as we continue to move forward. Aussie pairs underperforming in the market. I don't know what economic news came out because there was nothing on the calendar yesterday for announcements today coming out for the Aussie. Only for the British pound, because there are a lot of British pound announcements coming out from the British pound government today. So again, not trading, not looking at any. I didn't put on any British pound positions yesterday because I don't trade into news events. You just don't do that. That's an easy way to get completely wrecked in the Forex market. It's a little different. It's nice. As you guys can see, here's the Forex calendar that I use right here on Forex Factory. I think it's great. I've been using this one for a whole long time. We can see what was coming out today. We had the inflation report from the Bank of England. We had the MPC official bank rates. We had the monetary policy summary, which I think was the biggest thing. The official bank rate. Just a lot of stuff. We have Governor Carney speaking from the Bank of England. A whole lot of things about the British pound coming out. Aussie pairs just took a dive, Andrew. Well, sometimes that happens. That's why it kind of surprised me. This is the second Aussie pair I've seen that took a dive, and there was nothing on the calendar. So just a down day for the Aussie. All right. Anyways, so looking at the Aussie Kiwi might be setting us up for a short trade. We need to watch that qualifying line. Let's make sure that I've got this set up properly for. Let's set this up for Forex. Sorry. Adjustments. Yeah, so we are well below the qualifying line. So the Aussie Kiwi is going to have to be on pullback status, waiting for that pullback to enter into the short trade. Aussie dollar, I am short on the Aussie dollar, as you guys can see. Here is my entry back up here. I entered the Aussie dollar on the 23rd of July. And from my entry, currently up about 168 pips so far on the Aussie dollar. Good trade, man. The euro dollar died last night. So again, the time is not yet there to be putting on that trailing stop loss. I'm going to continue to let this continue to actualize and go to the downside. But big volume coming on these last candles, as we can see. I mean, that volume really sticking out above the latest trend. So the Aussie dollar continues to excite me, and again, just continues to be the gift that gives on giving. Depending on a couple other indicators that I don't have on the screen, because I rely on MetaTrader to look at them when it comes to Forex. I might be looking to tighten up the stop loss tonight, but again, that's typically not what I do. I just let it ride until I get that exit signal. Canadian Swissy is signaling a short trade today. We might be taking that one. We do have Wadatar Explosion giving us a rising explosion level and a nice, beautiful red column above, and Minx crossing below the zero line, which is going to be our primary initiation, and we are also above the qualifying line. So let's go back and kind of look at the trend. We've gotten a whole lot of consolidation, but base, we do have quite a bit of ways to go down until we reach a level of support. So feeling pretty good about that Canadian Swiss trade. If everything is looking like it is now, then we'll be taking that short. The CAD Yen is, man, big fuck you candle on the CAD Yen. Man, wow, look at that. Let's take a gander here. CAD Yen, let's see. I know that we're going to be almost twice below the qualifying line, so not anything that we can hop in on. Great trade if you guys caught the CAD Yen short. Again, this is bank manipulation, but CAD Yen is signaling a short trade, so we'd have to be on pullback status waiting for that CAD Yen pullback. Swiss Yen as well, taking a huge dive to the downside, man. What a day for Forex. What a day for intraday traders. A lot of people clearly getting wrecked, though, I bet, because this is generally going against expectations. But chop and pop out of the Swiss Yen and then actualization of the downside. Man, what a day. What a day. Hey, thank you so much, Mr. Ether, man. Hope you're doing well. I saw a couple of your tweets this morning when I woke up. Uh, 1371 Ray says, gold big breakout? We'll take a look at gold. Euro Aussie, again, this sickness is the worst part of being a trader, man, because you just can't catch good moves. Here's the long signal on the Euro Aussie, as we can see right here, closing above the tertiary. We get the long signal confirmed by Wadatar Explosion. And again, just continues to be the gift that keeps on giving. So Euro Aussie looks quite good. Too late to hop into a long on this pair yet. Let's see here. Euro CAD. Again, you guys can see the trade right there. That's all done right before the pullback here. And really nothing to do here so far as the Euro CAD goes. Did signal that short trade. That's why we took the short trade. Nothing so much to do on the Euro CAD. Well, I mean, there is. Let's watch for the pullback potentially, and then potentially the re-entry. But now that Wadatar Explosion is signaling a green, that's a flip. So typically we'd have to be out of that trade either way you wanted to slice it. Looking at the Euro Swissy is signaling a continuation short trade. So we'll be looking at that. Let's see if we are within the boundaries of the qualifying line. We are not. So not going to be looking to take the Euro Swissy short. Euro Kiwi, I'd say, is the only trade that's not going 100% as planned. Obviously, we're in profit on this trade. I think only maybe 20, 30 pips, something like that. I did get into the long over here with the initiation trade. And we had a big pullback. But again, price closed right above. Haven't gotten the exit signal from this yet. So we continue to ride the Euro Kiwi long. Euro pound, nothing to do on the euro pound. I mean, again, we did have our long signal here, and we are above the qualifying line. So let's actually take a look and see if we popped back within the boundaries of that, and seeing if we can get this pullback. And we can't. We're just too high above. Euro yen as well. Euro yen taking a big steep dive, man, below the qualifying line. Euro dollar finding a little bit of a bottom. Going to be a while before we can take a trade on the euro dollar. Pound kiwi, I'd be looking for a reversal short, but not at the moment. We are drifting back up with minks and looking to cross back into the static line. Pound CAD, again, I didn't put on any pound pairs, so we're gonna actually skip over the pound pairs because I don't have anything to say on them. Short on the Kiwi dollar, as you guys can see here. Took the Kiwi dollar short over here. Here's my initial take profit, up quite a few pips on this one so far. Up 103 pips, so doing pretty good on that trade. Kiwi CAD, short on the Kiwi CAD as well. Nothing to do here so far. Continue to ride the Kiwi CAD trade and keep that one open to the downside. Kiwi Swissy short on the Kiwi Swissy as well. So you guys can see I kind of picked on the Kiwi. Pop it, lock it, drop it. Sachin, thank you so much, man. Highly appreciated, my good friend. Trump announces 10% new tariffs, and there goes the S&P 500. Buy the dip. Yeah, Midwest attempts. DNT BTC on the daily. Scott should be putting that in the request section. If we don't, when we get down to there, make sure to remind me. What do I think of this pattern? Isn't consolidation around the baseline with a pullback at the end usually a bullish sign? Consolidation at the baseline with a pullback. I mean, I'm going to default to the dominant trend. The dominant trend's bearish right now. So it's actually, it would be a bearish sign in this particular sense for me. Made history on intraday spreads? I bet, man. So continuing to ride the Kiwi Swishy short. Short on the Kiwi yen as well. This is probably one, I mean, I pretty much took Kiwi short on pretty much any asset pair that I could. Again, just feeling really good on the Kiwi yen, man. Feeling really good on the Kiwi yen. Up about 168 pips on there as well. So multiple 100 pip profits on pretty much all my Kiwi trades. Dollar CAD was long on the dollar CAD right here, and ended up taking my profits on this candle that just spiked up to the upside. Let's go look at the pound Aussie. Didn't take the pound Aussie long, so we won't look at that. Let's see here. Dollar Swissy. Oh, I need to exit this trade because this is a trade that hit take profit. I was long, and now we are below. So I'm actually losing a little bit on there, but we'll go ahead and close that trade out because I should have been out at break even on that trade. Dollar yen, man, taking a big dive down. Aussie Canadian, again, very short. Nothing to do right now. Aussie, I mean, this is just a beautiful, beautiful movement, man. Beautiful movement. And the dollar yuan just skyrocketing. Dollar yuan skyrocketing. You know, and here's the thing, man. This is a true story. I went long on the dollar yuan last night, and then I double checked and saw that we were above the qualifying line, and so I exited the trade at no loss. And obviously now, wishing I would have held on to the trade, but I'm glad I didn't because I know that sticking to my strategy over time yields more profits than worrying about any one individual movement in the market. But Forex traders, what a day, man. What a day, dude. What a day. I only look at the Forex charts one time a day. So crazy. Absolutely. Well, twice now because I do it on the live stream, but crazy, man. So fantastic. Cheers to all you profit holders out there. And again, rest in peace for anybody that was not trading with a stop loss today. And moments like those in the market show you why it's absolutely critical to be trading with a stop loss, you know? All right, so with that being said, let's head over to the news of the day with we got to re-record this. So we will re-record this, guys. Oh, no. So let's go here and turn on the FX. So let's go to the news and see what's happening with Today in Bitcoin. There we go. Hopefully that sounds good. Let's try it again. All right. So let's head over to the news, guys, with today's episode of Today in Bitcoin. Yes, that just happened. Okay, our first article coming from our very own author, man. So thank you guys so much. Thank you so much, Joe, for putting this out for us. Make sure that you guys, Joe provides blogs for us in-house. This one you guys can find on krakencryptocurrency.com. Go to the blog and you guys can see all our blog posts that we post up. Make sure to leave a comment on the blog so we know that you guys like this content, that you guys would like to see more. You guys, this is what Joe does for a living. So again, make sure to give him some support. There is a button right there where you can support the author if you guys so like. So within its quarterly XRP market report released on Wednesday, Ripple revealed that it dumped over $250 million worth of the XRP token, which is an increase of 82 million from the previous quarter. Now, they sold 106.87 million Ripple in institutional direct sales, while raising 144.64 million in programmatic sales. I would say that one of the most important things, one of the most interesting things about this article is where they say that, this report admits that due to falsified exchange volume reporting, the company has scaled back the amount of XRP it would dump onto the market. It would now only use the exchanges rated AA, A, and B by the Crypto Compare benchmark. So this is this would give a lot of credence. This would give a lot of credence to, I guess this gives credence to what we already knew, which is that a lot of exchange volume is falsified. So let's see here. Ripple sales of XRP are based on market activity, which increased over the second quarter, along with a large increase in total crypto market cap. Increased use of Ripple's Bank's Liquidity X Rapid, which saw transaction volume spike 170% from Q1 to Q2. Let's see here. I mean, this is a fantastic article, man. There's almost too much in here for me to go over. I mean, regardless how you guys feel about Ripple. So what I will comment on is from a trader, what is the result of fresh XRP being dumped on the market? Well, typically it's bearish. I mean, unless there is a significantly greater demand for XRP, then fresh XRP, that is excess supply that is coming onto the market, irrespective of demand. And again, a lot of individuals buying XRP, this is how XRP is released onto the market, is still more XRP in circulating supply to be sold. So this is going to negatively influence the total market cap because now you are dividing by a different, well, not really affecting the market cap, but this is going to affect price because price is going to be determined by, market capitalization is going to be decided by total supply. And again, we reported earlier on kind of the debacle between how XRP market cap is reported, because according to the company and a lot of XRP dieholds, they should be using the total supply of XRP, which includes XRP locked up by Ripple, R3, but most of the accounting firms, and again, I agree with them, should just use total circulating supply because there's no guarantee of what Ripple will do with that excess supply because they have fiat control over it. So they could choose not to release it, they could choose to release it, or they could choose to dump it on the entire market, regardless of what agreement that they have made to us. So make sure to check this one out over there on krakencryptocurrency.com's blog, guys. Fantastic article, and another one coming to us from Joe, especially if you put a lot of credence on XRP or are interested in XRP. So let's talk about the Federal Reserve, guys. So the Fed lowered interest rates yesterday for the first time since 2008. Now, this is a big departure from past policy. This is only the second time the Fed has cut interest rates when the percentage of Americans looking for work has been underneath 4%. So, we could talk a whole lot about, what this means or what this does, but I want to talk about how this affects you as a trader or as an investor or just as a citizen. Well, lower interest rates mean easier access to credit and loans. So borrowers who are wanting loans and traders who want to access leverage for their trading or for their investments will continue to see great access to leverage. And that leverage will be invested in the stock market and investments. So very bullish on typical assets right now based off of this news. I do think that this heralds that they'll be doing this for quite a while. I talked about this earlier. I think that we are moving into one of the best economic, one of the most bullish periods in not only Bitcoin, but also stocks. Also, I mean, just pick an asset. But basically the stock market that we were going to see in quite a long time. And I think that sitting on the sidelines and doomsaying about how the end is near and we're going to fall off a cliff, that's all well and good. You have to be prepared for that by building a good portfolio that sustains that. But I don't think that big fall off the cliff will be the end of the stock market. There will be no end of the stock market. You guys have to remember this. Even if Bitcoin replaces dollars, a lot of people seem to think that if Bitcoin wins, there just will be no public, I know that some Bitcoiners, kind of live in this socialist dream where the stock market just is an evil thing. Capitalism is good. Capitalism works. The stock market is a good thing. There will always be speculation, trading, and investment because there's always going to be competing ideas on what a share price should be. And we do know that shares and publicly traded companies are a good way of monetizing and getting companies out there and in public control so that the public can have more control over voting rights. So this system works. It works absolutely. The problem is government control. The problem is central banking. So if Bitcoin, when Bitcoin replaces fiat currency, all that's going to happen is that instead of stock prices being quoted in USD, they're going to be quoted in BTC. That aspect of the markets is not going to change. So you still buy quality companies. Like that is, I know that I'm unpopular with some diehard crypto people for this, but I think it's just a complete logical inconsistency on their part to think that Bitcoin achieving its role as world reserve currency means like abolition of capitalism or abolition of the stock market. And that's not true. It would just make the stock market better. It would just make the stock market better because we would have a sound money backing the stock market. And we would actually have more protection for investors because we would have less inflation. So we would have to worry less about all this over leveraging. We could avoid financial collapses and financial crises. We could avoid these boom and bust cycles. But the stock market remains, guys. So I think that the stock market continues to be bullish and will continue to be bullish for quite a while. Today is August the 1st. So one of the first things that I did this morning was deploy my capital into the market as I do the beginning of every month, as I typically do the beginning of every week, making exceptions for the first of the month, though, because I just like to kind of tidy things up. And again, there are a couple ideas here. So let's get back into the article, and then we'll kind of explain more on this as we go forward. Ideas and things for you guys to do. So you'll continue to have good access to leverage for your investments. Credit card rates won't change because those are not based off of interest rates, but on a individual's credit history. Now, home borrowers and mortgage rates, home borrowers typically do benefit from lowered interest rates, but probably not this time. And that's because the 10-year rate on government bonds was just previously lower than the Fed's short-term rate. Now, the rate cut typically does, boost the 10-year basis spread up a little bit. And since mortgage rates sit about, on average, about 1.6 above the 10-year yield, the 10-year rate on treasury bonds, I would expect the fixed rate to continue to sit at around 3.8%, which is what it's currently sitting at, the average for a mortgage. So I don't think that anything's going to change for home borrowers. I think that you'll still, again, if this is the time when you're looking to get a house, I think this is the time to get a house. If it's within your finances, I think that, once credit dries up and we're in the midst of a recession, I think that your access to credit is going to dwindle away and access to loans dwindles away. So you want to get that line of equity now. You want to have that property now when it is easy for you to take on the leverage to afford it. If you are capitalized well enough to be able to afford the house in the first place. A lot of people say that, there was a lot of evil, it's like the company's fault, it's the bank's fault. Listen, I'm not going to get into those picking matches with you, but I will say that people are not taught well about finance. And one of the things that contributed, one of the big reasons, and again, I don't blame the people for this, but this is just a fact. One of the reasons why there was such misery among people when in the 2008 financial crisis, and the reason so many people lost their homes is because they were homes that those people couldn't afford in the first place, right? They weren't secure in their jobs. They weren't secure in their finances. They didn't have any investment. They didn't have any nest egg because the housing market recovered. The stock market recovered very quickly, but people were just not able to deal with that short-term collapse in the short term, not able to pay their bills because they did not have an emergency fund set aside. They didn't have any money in savings. They didn't have any money in investments. And those almost, and because this is true, for the majority of individuals, those are personal financial decisions. People don't take money aside and put it in savings. And that should be the first thing that you do with any money that you receive instead of buying anything. And they tend to suffer for it. So financial discipline is difficult to achieve, but once you do, it becomes a lifestyle, and then you can do things. I started saving when I was working at Arby's, for the love of God. All right. And I was able to go from there to becoming a full-time trader and doing what I do. I had different jobs in the interim, but I'm just saying I started at Arby's when I was making minimum wage. So I have compassion for people who are in rough times. In fact, that's why I give to charity. That's why I help people out. That's why I do my best to make the world a better place. But the best thing that I try to do is educate people on how it is their responsibility to save money and protect themselves and prepare themselves and do the smart thing with money so that they are prepared and not at the whims of any swings of the government. And why I continue to champion the cause of Bitcoin and to get money out of the hands of government in the first place so that it doesn't have access to do things like this anyways. Now, this is bad news. So the rate cut is bad news for savers. So lower interest rates means that you are returning less on your savings per annum. And that coerces you to put your money into the market just to beat inflation, because otherwise, if you don't, it's just being eaten up by inflation. So your typical bank savings account is going to offer an average interest rate of 0.44%. So your money is being chewed up by investment. So here is something practically that you can do right now. And I don't have here. I forgot to do this. I'm going to fix this right now. Just one. There we go. Okay, I got it fixed. Okay, it should be fixed. You guys might have to refresh the page, so I will post it in the chat as well. There we go. Okay, so if you guys don't want your money to be eaten up by savings, you guys can do what I do. I put any excess cash that I'm not deploying and that I am just holding as savings. This is where I hold my emergency fund, and this is where I put money that I'm waiting to deploy as capital for cheap prices for either stocks or cryptos that I'm interested in acquiring for the long term. I put it into Wealthfront. Wealthfront is an online savings account. They are FDIC insured, and they offer 2.57% interest rate on your deposits, right? So this is basically 2.57% risk-free. All right, your money is FDIC insured. It's as safe as a savings account can possibly be. There's no fees. If you guys want to invest in Vanguard stocks, you can just click the other tab and do that automatically. I've been using Wealthfront for quite a while. I highly recommend them. I think it's amazing. So I will post the link to Wealthfront if you guys would like to use my link. It's in the chat. It'll be in the description down below as well. But that's what I do. And I think a really, really good idea is, if you have money sitting around anywhere that you're waiting to deploy, or if you want to put money away to deploy when the market corrects, like for right now, for example, and when prices are low, so you can snag investments or crypto up on the cheap, put it in Wealthfront, because otherwise you're passing up on free money. And in fact, you're losing money if it's just sitting in a regular savings account, because you're getting eaten by investment. So, but for investors among us, okay, this is cause for celebration, I think. You should pop the champagne bottles, because this new policy is likely to continue for a while. So look forward to another 3 to 5 years of, I think, exciting growth in stock prices. And I think this bodes really, really well for cryptocurrency as well, especially for Bitcoin, as more and more people become awake to its use and potential and its capability as an investment vehicle, as a resource. I think this is really good news for Bitcoin. Because it just means that the entire market's bullish and people are going to continue to hedge against the coming against the coming recession, against the coming correction into Bitcoin as well, and they'll have more capital to do so. All right. All right, our next video, or excuse me, our next little bit of news is going to be this. I don't know if you guys saw this. So Roger Ver posted some stuff on his Twitter, but Bitcoin.com, right, which is Bitcoin Cash. It's owned by Bitcoin Cash. They are launching their own exchange, their own Bitcoin Cash exchange. And Roger Ver silently stepped down as CEO of Bitcoin.com. So you guys can go see who the CEO is. So the Bitcoin.com exchange is set to launch on Monday, September 2nd. The exchange will let users trade crypto and eventually SLP tokens, which are tokens on the BCH chain. And they're going to be launching with 50 plus trading pairs, and we'll be adding more post-launch. Base pairs are going to include Bitcoin Cash, Bitcoin, Ethereum, and Tether. It says users who pre-register will receive rewards, including discounted trading fees and the chance to win prizes worth over $10,000. So you guys have been looking for your very own Bitcoin Cash exchange. You guys can go trade on Bitcoin.com. I will not be trading on Bitcoin.com. I don't trade on exchanges that don't have a proven track record, especially like newer ones. I would say that the one exception to this is going to be the IGUS, where I'm considering moving my trading from Awanda. Not 100% on that yet. I'm not sure. I still have yet to test out the new IG platform, but that's because IG has a long, extensive history, and now they're opening up shop in the United States, giving Forex traders access to Forex, giving access to their type of markets. Not really their markets, but their brand, their engine, their customer service, et cetera, et cetera, et cetera. This is a thing, guys. This is a thing. I don't really have too much to say about this, but if you guys are interested in this, if you guys are holding Bitcoin Cash, if you guys want to check out the exchange, obviously the information is there. Okay. Let's review. Shoot, where is that? I gotta find the link. Here we go. There we go. I wanted to review SKU's July recap thread. So this is going to be some fundamental information on Bitcoin. This is going to be interesting to people who look at these metrics like I do. So overall, they're saying performance. Bitcoin increasingly trading sideways and consolidating around 10,000, down 10% overall in July, up 170% year to date. No alt seasons. Altcoins are high beta on the way down. Ether down 26%, up 60% year to date. So you guys can just see the underperformance of Ether compared to Bitcoin year to date. Volatility. Bitcoin's average daily volatility is 5.5%. Two very distinct regimes, nearly record high volatility in Bitcoin moving into the Facebook hearings on about 8% a day on average, and nearly record low volatility in the last 2 weeks on average of 2.6% per day. Options volatility, expectations of options traders for future volatility is starting to sell off against this backdrop, expecting a 4.8% daily move over the next 3 months, still high by recent historical standards, but that's because options are fairly new based on historical standards. Volumes. Volumes retreated compared to record June numbers, with open interest also contracting. Average daily volumes at the CME were 400 million per day. Bitcoin's XBT USD perpetual swap trade on an average 4.46 billion contracts per day. The options market continues to grow nicely, so shout out to Deribit over there. Key developments, according to SKU, are obviously LibraCoin, Facebook's ambitions with LibraCoin, cryptos being the spotlight in DC over July. Global easing, $14 trillion of sovereign debt is now negative yielding. The entire Swiss rates curve is in negative territories, and the Fed cut interest rates for the first time in 10 years. And UBS, I don't know if you guys heard this, but UBS is starting to charge its customers 75 basis points on their cash deposit. That's 0.75%. Against this backdrop, gold and Bitcoin bulls are getting more vocal by the day. Also, against this backdrop, the largest crypto derivatives exchange is being probed by the US CFTC on whether US traders are allowed on the platform. BitMEX saw 15% of their Bitcoin holdings being withdrawn this month. But liquidity on BitMEX was actually completely unaffected. Order book depth actually gradually improved throughout the month, which is a function of reduced volatility in the market. And it's only 39 basis points spread to trade 1,000 Bitcoin futures. That's 0.39%. That's how liquid the markets are over there on BitMEX. Deutsche Bank's layoffs is important. Seasonality and corrections. So how did the movements of Bitcoin over the course of July add up? Seasonally, not uncommon. It's pretty normal to see kind of a flub Q3 before a big Q4 run up is kind of the takeaway from this as well. Let's see here. In July, crypto markets stopped playing with traders' free time and resumed with quiet weekends. Thank you so much. New stablecoin projects have failed so far to derail Tether as a force behind crypto markets. USDT total market cap seems and Bitcoin's price seem directly correlated. Bitcoin is flatlining, but the ratio of longs liquidated to shorts liquidated on BitMEX is 2x, meaning twice as many longs are liquidated on average than shorts on BitMEX for the month of July. Longs are obviously more leveraged. Funding is neutral. So brilliant reporting. Thank you so much, Skew, for your continued great work. Skew is a fantastic resource. SQ3W if you guys would like to have access to that information. All right. I want to cover BNB's mechanism here real quick. So daily BNB balance calculation mechanism update from Binance. So starting tomorrow, we've talked about this before. There are the way that Binance has previously calculated your funding, or excuse me, your BNB balance was just taking a snapshot at the daily candle close every day, 00, or actually at 23.99, 23.59.59 every single day UTC time, which is 6:59 my time. Daily candle closes at 7 p.m. for me. So starting tomorrow, they're going to be using a different mechanism. So what they're going to be doing is actually taking random hourly snapshots throughout the day. So every hour, but at a random time during the hour, and then averaging that out divided by 24 so that users will not, and they're doing this to reduce volatility around the daily candle close for BNB. Again, I've talked about strategies for trading the daily candle close specifically on BNB because of the snapshot mechanism before. And, This is definitely something to look at. So this is going to impact the calculation mechanism. Obviously impacts the Launchpad's BNB lottery mechanism, the trading fee VIP referral system, and the referral program. So I know that there are actually strategies built around this. So people who are getting a lot of Binance referrals, Binance referral commission, that's all based off the BNB that you hold. Your VIP, your fee reduction for holding BNB is calculated based off how much BNB you hold. So all those were previously calculated, during the day. So a lot of people would buy BNB. I know people who have algos set up just to do this. Buy Guapa BNB right at, a minute before the daily candle closes, and then immediately sell it like 1 minute later, so that they could get that, higher rate without actually having to hold BNB and let that affect their portfolio. Well, that's going to change now. You're not going to be able to do that. It's going to actually calculate your time throughout the day. So either these bots are going to have to get more complicated, and again, the times are going to be random. So unless somebody leaks that information, kind of like how we used to cheat on tests back in the day in high school, maybe not you guys, but drink coffee, change topic, is going to be, they're not going to be able to do that anymore. It's actually going to be looking at, I think, a fairer way of how much BNB are you actually holding over time. So keep that in mind. If you're running a system that takes advantage of the BNB snapshot mechanism, or somebody that is, that's going to change for them, especially if they happen to miss this. But if they are, they should probably be keeping up on Binance updates in the first place. So I want to get into our big story of the day, which is UASF 2-year anniversary, guys. Again, shout out to you guys. I know there's probably some people who have no idea what I'm talking about. So I want to walk down the greatest drama, potentially, one of the greatest dramas in Bitcoin's history, in Bitcoin's legacy history, and talk about just how SegWit unfolded, everything that went around in it, explaining exactly what happened between June and August of 2017 and how Bitcoin Cash ended up forking off, everything that went into that, because leading up to that event, there was so much uncertainty in the market. And, looking back, it was such an amazing experience that we won. And I want to talk about that. So for those of you who don't know, UASF stands for User Activated Soft Fork, and it refers to BIP 148. So BIP stands for Bitcoin Improvement Protocol. And what that means is that every once in a while, a BIP will be published, which is generally from a developer or a group of developers, which is going to Bitcoin Improvement Proposal, which is going to propose a set of updates to the Bitcoin protocol, right? Which is actually the program that is underpinning the clients, which is underpinning the entire network. So, for those of you who are newer to the space, and for those of you who are mostly concerned with altcoins during 2017, June through July of 2017 was a very tense moment for Bitcoin. There had been a big, steep ideological divide in the community for a long time, and it centered around the block size debate. Now, Bitmain, let me put this on scroll. Let's actually go over to Bitcoin's price and look at Bitcoin's price. Now Bitmain, if you guys aren't familiar with Bitmain, Bitmain is an extremely large company that pretty much had a monopoly on, still do to a degree, developing ASIC miners. So Bitmain had created and patented a hardware process known as ASIC Boost, and that increased the efficiency of Bitcoin miners by 20%. That means that miners owned by Bitmain held a 20% advantage over other miners, which many felt was unfair because it was a patented process. Now, ASIC Boost was rendered pretty much useless with the introduction of BIP 141, which was the introduction of segregated witness, aka SegWit. But that didn't happen until August 1st, 2017. All right, that's not until BIP 141 was implemented and pushed live on August 1st, 2017, excuse me. Now, so prior to that, there was a huge problem in the community about the block size debate and about ASIC Boost. And really, it had nothing to do with block size. It never did. It was all about mining profits. It was all about Bitmain. It was all about ASIC Boost. So this whole debate played out, as I just said, about block size, but it really was about mining profits. So at the time, Bitmain and associates controlled about 30% of the hashing power. And SegWit activation, so for BIP 141 to be pushed live, needed a 95% vote from the miners. And with Bitmain and associates staunchly opposed, there didn't seem to be a way to get it to move forward. We didn't see how we were going to get segregated witness in, which was largely agreed upon was the move forward, because BIP 141 would introduce SegWit and would allowed all of this and would have disabled, basically rendered ASIC Boost useless. Also introduced phase 2 applications or layer 2 applications, which allows for things like the Lightning Network. And it also increased security and helped improve transaction malleability. So Bitcoin Unlimited had existed inside the Bitcoin community and was a huge part of this as well. Bitcoin Unlimited was developed. Bitcoin Unlimited was Bitcoin Cash before Bitcoin Cash was Bitcoin Cash. Bitcoin Unlimited was running the Bitcoin Core protocol. It was Bitcoin, but they had their own client. So if you guys know, like a client is when you're running Bitcoin Core, that's a client, that's a wallet. A wallet can be generated from a client or independently. But there's always a client, which is, how information to nodes are broadcasted, how information from nodes is received, et cetera, et cetera. Governs consensus and all things of this nature. Signing of transactions. So Bitcoin Unlimited had existed for a while on their own. Now, Bitcoin Unlimited was always pushing for bigger blocks. They threatened 51% attacks on the Bitcoin network, and hard forks. They wanted to move Bitcoin down a different path than a majority of the Bitcoin developers. So as I said, this was Bitcoin Cash before Bitcoin Cash was Bitcoin Cash. So SegWit was already accepted. The idea of SegWit and and the way the block size was already and layer 2 applications was already accepted by many in the community early 2017. And it was an upgrade. So it was an upgrade to the Bitcoin protocol by a voluntary soft fork to increase the block size. Yes, increase the block size, fix transaction malleability, and as I said, allow layer 2 applications like the Lightning Network. So we were at this stalemate with Bitcoin Unlimited, pushing and pushing and pushing for bigger blocks and threatening a chain split, and with Bitmain, using ASIC boost and having that be a big problem. So a lot of people thought we were at a stalemate. We didn't see how we were going to get out of this situation, and a lot of people thought that, God forbid, it might even bring the network down. This was a huge problem, a huge ideological divide. For those of you who are not in the Bitcoin community, who do not keep up with what the devs talk about, with what miners talk about. For those of you guys who just exist on exchanges and look at price, you guys have no idea what a big deal this was. This was huge. This was huge, absolutely huge. It had the potential to fundamentally cause a huge good or negative to Bitcoin on the protocol level. So, in a pretty brilliant stroke, Shaolin Fry, who is a Bitcoin developer, he introduced BIP 148 onto the GitHub in March 2017. Now, what BIP 148 proposed or implemented is that it would cause nodes to reject blocks mined by miners if that miner was not signaling for SegWit, was not signaling that they were going to mine SegWit blocks. So after August 1st, if BIP 148 was pushed, then those refusing to mine SegWit blocks would be wasting electricity and would be outcompeted by those that would. It was basically a ticking time bomb. And this is when the New York agreement happened. This was a closed door meeting to those who were basically Bitcoin Unlimited sympathetic to figure out how to resolve the BIP 148 power play. So this is where B2X or S2X concept was birthed, where it was agreed essentially that SegWit that they would agree to implement SegWit only if they agreed that they would double the block size to 2 megabytes within 6 months, or else they were going to hard fork, right? So again, always with the threats. So this was a counter power play to the BIP 148 power play. Now, there were a few problems with this, namely that the code to do this, to do the 2 megabyte upgrade, to do the 2 megabit upgrade, was not written and had 6 months to be developed, created, tested, and implemented. Conversely, the original SegWit proposal, BIP 141, had been developed for about 2 years and had been rigorously stress tested. Things move slowly in Bitcoin because they're good. They have to be stress tested. So, Bitmain published a blog article titled UAHF, a contingency plan against UASF BIP 148 on June 14th, 2017. This hard fork plan that they actually talked about did eventually happen, and that eventually became Bitcoin Cash. But basically, that blog, that manifesto, states that if BIP 148 was activated to protect miners who chose to mine non-SegWit blocks, that they would just fork and make their own chain, which they did do, and it was Bitcoin Cash. So I want to give a big shout out to James Hilliard, who is an unsung hero of 2017. He wrote the code to make both the S2X proposal and BIP 148 compatible via BIP 91. So, as we know, the way that this played out is that BIP 141 was successfully implemented, which was the original SegWit proposal. The original intent of BIP 148 was actually not for it to be activated, but it was meant as a power play to coerce miners who were colluding with Bitmain, who were profiting from ASIC boost, or those affiliated with them, to signal support for BIP 141, which was SegWit. It was a power play, a beautiful stroke actually, to evoke change in a productive manner and move the Bitcoin network forward from this gridlock. And it worked. And here we are, 2 years later, August 1st, the second birthday of BIP 141, and unfortunately, the legacy of Bitcoin Cash. So happy UASF Day to all of my Bitcoiners out there. We did it. We won. And, technology prevailed and Bitcoin is stronger than ever. And what this really means, so if that story didn't really mean anything to you, if that doesn't excite you as much as it does me, this is just fundamentally to let you guys know that a Bitcoin allows somebody to participate in a system and stay true to one's beliefs. So whether you're a miner or a businessman or a developer or just a Bitcoin hodler, you participate selfishly in the Bitcoin system without trusting anyone. Only when interests align do we get development. Only when interests align do we see cooperation. This is very similar to the noblest concepts of government, of the founding of governments, made reality by code. Bitcoin's complex system of checks and balances decentralizes the concentration of power and of the protocol. This is a new system of governance without appeal to authority or leaders. The story of UASF and SegWit is a story of people triumphing over corporate greed. So I want to give a big shout out to Karate Chop over on Medium. Your wonderful Medium article helped provide the content for this segment and inspired this segment quite a bit, man. So shout out to all you guys and shout out to all my Bitcoiners out there. And with that being said, guys, we're going to wrap up today's show. It is 1:55. What a fantastic show for you guys. We're going to flip right on over to here. So thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update, guys. I'm sorry that I didn't get a chance to do a lot of the requests today, but we just had so much to cover. We'll try to do better with the requests next time. If you guys are new to the channel, make sure to subscribe. Make sure to follow us on Twitter and all our nice social medias, which are listed down below. They'll also be on the end screen, which I flash here in just a little bit. If you guys would like to participate in the crypto comment giveaway, you guys can leave a comment down below and you have your chance to win some crypto. If you guys are traders, new, aspiring, or experienced, and you want to trade with us, you want to learn how we do things, then make sure to join the Discord at discord.crackingcryptocurrency.com and consider joining the premium group where you guys can get mentorship, access to our indicators, access to our rules and tools, and our private trading community at premium.crackingcryptocurrency.com. If you have any questions, comments, concerns, sarcastic remarks, and or death threats, make sure to leave them in the comment section down below, and I'll do my best to get back to you within 48 hours. And make sure to check out the podcast at breakingbitcoin.money, breakingbitcoin.money, to get links to all our podcasts on all the podcast catchers. We are on Spotify, Stitcher, Podbean, Google Play Music, Google Podcasts, and iTunes. Make sure to go leave us a 5-star review on iTunes. We really appreciate it, guys. We will be back tomorrow with all the latest Bitcoin news, sentiment, trades, setups, and fundamentals that we can cram into 2 hours. I'll see you guys in the Discord. Until tomorrow, trade safely and take it easy.